We have a quick question here from Asanka, asking how we can go about finding high probability price levels that the market could likely react from. And this is in reference to the more recent price moves that we've seen in a pair like the pound US dollar from last week and this week, where the pair has very well respected the mid-level psychological levels, like the 125.50 and the 124.50, 126.50, etc. Now, I think the first thing to say is that we obviously never know in advance where the price will react from, right? But what we what you would have noticed by now by watching our videos, as well as the past videos that we've done, is that the levels that we usually mark out on the charts have a very high probability of providing either support and resistance. So we usually see the price reacting quite well or quite strongly from most of those levels. Now, this isn't because we have some secret weapon or something like that. It's just because we always try to look for confluence on the charts or evidence. And to your question, one of them, of course, is psychological price levels. Now, the way to know when price is more or less likely to react from a psychological price level, or whether you have a higher or a lower probability for any particular level, for that matter, is by looking at confluence or evidence on the chart. So that means looking for other things that might mean that price might act as a magnet towards that particular level. Now, one of these elements, as we said into your question, is psychological price levels. So that'll be your 126 flat or your 127 flat or 128 flat, or that could be the 127.50, 126.50, 125.50, etc. But the other elements, are also just as important, like normal support and resistance structures, trend lines, the average daily range, pivot points, whether that's the regular daily pivot or the S1 or the R1. All of these things are very helpful to find very high confluence areas. So looking at the pound US dollar, over the last couple of days, it has been a good example of respecting these psychological price levels, but also acting in terms of confluence with most of these levels. So on Friday, we of course had the almost perfect rejection from that 126.50 level. Now, the psychological price level itself wasn't important by itself, but what other factors we had in play was important. So at the time, we also had the daily pivot that was almost, I think, right on top of that level, if I'm correct. And we also had this overall area that acted as both support and resistance prior. So a very important level on the chart from a support and resistance point of view. And I think at the time we also had the ADR not too far away on the ADR high, not too far away from that chart. So you know what? Let's quickly go to that Friday video. Let me just quickly scroll down. Okay, there we go. So let's just open up this one. We won't have to play the video. So there we go. So we can see that, from that 126.50, we almost had the daily pivot point right on top of that level. We, of course, had that overall support and resistance structure. So there was confluence not only from the 126.50, but from all the other elements on the chart as well that told us this is a higher probability area to expect some resistance for the pair to come in. Now, of course, even to the downside, we traded this to the downside. So what we looked for in terms of support, yes, we did mark out that 125.50. But apart from just marking it out as a arbitrary psychological price level, we know that this was important, firstly, because that is where the price rejected from earlier in that session. So that was our most recent fair value low. But apart from that, we also had other things like the S1 pivot was right below that level. We also had the ADR low. So this entire area gave us lots of confluence that the market will most likely react in terms of support from that level. Now, of course, playing out later, the chart actually moved here. It broke through. Let's go to back to the actual chart. What happened is we did reach that level, but we broke through and came back and see exactly where we retested it was exactly that zone again. So these levels are great to have on the chart. The psychological price levels. It's a real useful tool to have in your charts in terms of analysis. But they are always going to be more useful when we incorporate them alongside the other many tools that we have, like the pivot points, like the ADR, like support and resistance. And then, of course, the higher the time frame goes, the even more important these levels become, and because we often see them react from these strong psychological price levels. So I hope that helps us, Sanka, with knowing when and how these levels are more and less likely to see reaction from in the markets. Any other questions, don't hesitate to let us know.